Hello, class 12 students. Today we will learn income method of national income accounting. We know it well. National income can be measured in any of the three methods. Income method, expenditure method, and output method or value added method. Today we will go through the income method of national income accounting. When we are estimating national income following income method, then as our first step, we will divide the entire economy into three parts or three sectors. What are these three sectors? Yes, number one, primary sector, number two, secondary sector, and number two, tertiary sector. We know primary sector means agriculture and allied activities. Secondary sector means manufacturing sector, including construction works, and tertiary sector is for all service generating sectors in the economy. So first divide the economy into three sectors: primary, secondary, and tertiary. Now in every sector, income generates in three categories. In primary sector, or in secondary sector, or in tertiary sector, income generates in three categories. What are these three categories? Number one, CE means compensation of employees. Number two, operating surplus. And number three, mixed income. These are the three categories of income generating in every sector. You have to consider what is CE, that is compensation of employees, in primary sector, in secondary sector, in tertiary sector. You have to consider what is operating surplus generated in primary sector, in secondary sector, in tertiary sector, and what is mixed income in all these three sectors. So you have to consider all these things. So first, CE means compensation of employees. It is actually income from work. You are applying your labor power, and against that you are earning, that is compensation of employees. And there are different components of compensation of employees. Number one component, wages and salaries. This may be given in cash or in kind or both. But this is a regular payment. This is paid throughout the working period. In every month, workers are enjoying it. But some payments, some compensations are enjoyed after the end of their working period. That is the payment for future benefit. So along with wages and salaries, other components of compensation of employees are employers' contribution to social security schemes. For future benefit of the workers, employer may contribute in different forms, in different schemes that will be enjoyed after the working period. Retirement pension, pension after retirement, it is also delayed payment, deferred payment, enjoyed after the end of the working period. So these are the important components of compensation of employees. Joining them, you will get it from all these three sectors, and then sum up, you will get the compensation of employees of the entire economy. Similarly, OS stands for operating surplus. What is operating surplus? Operating surplus refers to income from property and entrepreneurship. Land and capital is property, and income from land and capital is rent and interest. So rent and interest is property income, and income of an entrepreneur is profit. The sum of rent, interest and profit, sum of property income and entrepreneurial income is operating surplus. Consider what is operating surplus in primary sector, in secondary sector, in tertiary sector. Add them, you will get total operating surplus in the economy. Now come to this very important term, mixed income. Sometimes we cannot separate. When income generates, we cannot separate which part of the income is due to work and which part of the income is due to property or entrepreneurship. We cannot separate, we cannot distinguish. It happens in case of self-employed people. A vegetable seller, self-employed people. A shopkeeper is self-employed people. So when their total income generates, how can you separate which part of his income is due to his labor power, which part is due to his property? Because all factors of production required are supplied by themselves. They are not hiring labor from outside, they are using their own labor or family labor. They are using their own land, they are using their own fund, they are using their own entrepreneurial ability. So total income is in mixed form. There is no payment for workers, there is no payment for land or capital. So in case of self-employed people, you cannot separate C and OS. It remains in mixed form. A greater percentage of income in the economy is in mixed form. So it is very important component, mixed income of self-employed people. It is in all these three sectors you will get it, add them, you will get total mixed income. So sum of C, compensation of employees, operating surplus and mixed income gives you domestic income. NDPFC is the domestic income. Domestic income is equal to C plus OS plus MI. In first step, you will get domestic income method of national income account. In next step, you will do what is asked to calculate. Suppose you are asked to calculate national income. National income means NNP at factor cost. So in second step, you have to find out NNP at factor cost. NNP, net national product at factor cost, FC for factor cost. This is national income. You have already got NDPFC, domestic income. Now here, only one adjustment is required. The middle term here D for domestic and here N for national. Otherwise all terms are same. So only one adjustment is required, domestic to national. Whenever we move from domestic to national, we add net factor income from abroad, NFIAB. Net factor income from abroad is the difference between factor income from abroad and factor income to abroad. Our factors are earning from foreign sector, factor income from abroad. Similarly, foreign factors are earning from here and we are making payment for that, factor income to abroad. Difference between these two is net factor income from abroad. So in first step you are getting domestic income. In second step you are just adding net factor income from abroad. You are getting national income. In this way we calculate national income in income method. If instead of national income you are asked to calculate suppose GDP at market price, in income method you have to calculate GNP at market price, gross national product at market price. What will you do? In first step you will calculate NDPFC. First step is common. You have to do it always. Find out NDPFC. How? Adding C, OS and MI you will get it. Now if you are asked to calculate GNP at market price, that means you are moving from net to gross. NDPFC is domestic income. GNP at market price you have to calculate. So you are moving from net to gross. You have to add depreciation. You are moving from domestic to national. You have to add net factor income from abroad. And factor cost to market price, GNP at market price you have to calculate. If you are moving from factor cost to market price, we know it well, we have to add net indirect tax. So in this way, if you know the adjustment procedure, maximum adjustment 3 or 2 or 1, in case of national income only one adjustment is required. You are moving from domestic to national. So add net factor income from abroad with domestic income, you will get national income. So this is the way you have to how to calculate national income by income method. Now you go through numericals. I will supply the different problems of numerical sums will be supplied to you. So this much today. Thank you.